Good now, revolutionaries, and welcome to the RiseUp Morning Show.
The RiseUp Morning Show.
Today is Wednesday, August 13th, and overnight my alerts were going crazy on CoinGecko. It is, in fact, time to play this sound.
Let the dancing begin.
We got ourselves an all-time high. Yeah, we got an all-time high. Yeah, it's an
Oh, yeah.
all-time high.
Not our friend Bitcoin, but the crypto market cap has achieved an all-time high. Alex, you just gave me the number. It's 4.2, did you say, $1 trillion?
4.19 right now.
4.19, might as well be 4.2. Congratulations. Pretty much everybody is in the green. Solana is back up over 200. ETH is over 4,700, depending on which exchange you get your price information from. And I was saying to the guys a minute ago, we might have been sleeping on BNB, or at least I might have been sleeping on BNB. It is at an all-time high in token price, over $800. I was like, whoa, BNB, cool it. Crazy
So
numbers.
hot right now. So hot in these streets.
So hot in these streets, entering what?
Let's call BNB Hansel.
Hansel, he's Hansel. And we're about to enter, or maybe we have entered, what Doug lovingly calls genius season, where everybody holding any token feels like a genius. If you've never been part of a crypto cycle before, it's pretty euphoric. You said,
Yeah.
not everybody, huh?
Can we get just quick time out to
Everybody.
answer? No, it is not Evan that is chatting with you.
Oh,
Whoever
whoever
you're
that
talking to
is.
is absolutely a scammer. If you are in DMs with anyone that looks like it might be one of our 3 accounts or any other creator, it is not, and you should block that person. Just a quick PSA. Sorry.
Yeah, we will never directly message you. You got to message us. And the best way to get a hold of us is using all the official links at our website. That's rumshq.com, like Rise Up Morning Show headquarters. Rumshq.com has links to the show on all your favorite social platforms, our official accounts, and it's got the link to join our free educational community where we have got a show that lives 24/7 in the form of chats, forums, classes, coaching you can buy, awesome global community. The only thing missing is you. Check it out at rumshq.com. So guys, there's a lot of different stuff going on in the cryptocurrency space, but I think a great place to start is where we were backstage. Eric Cespedes, pardon if I mispronounce your name, Eric, GM and Goodnow. Have you taken profit from Sol recently, Alex? And Will, I want to bump you in that question too. Now that we're over 200, taken profit recently?
Yes, a little bit. Like we were saying,
The market is green. Alex is always taking profits.
yes, always. So just for context, an insight, a little peek into my thought process. Solana is up 19% this week. I will definitely be capitalizing on any of my investments returning 20% in a short amount of time. The purchase price for the particular Sol that I sold to take profits this time was about 160, 162. So that was about a $40 per Sol gain, which I felt good about. I would not be remotely surprised if it continues to go up. I do have more Sol that I will take profits with as we continue to climb, if that is the direction we go. However, if we chill or pull back or have a correction of some sort, it would not have to drop very far for me to feel like I would like to rebuy, and I will swing some of that USDC right back in. The USDC is sitting on Sol. Jupiter has unbelievably fast and cheap trading. Little just snap of your fingers and there it goes. I feel like I would be silly not to take little profits. Plus, I'm literally always yapping about taking profits, so simply had to.
Simply had to. Are you taking profits, Will?
Nope. No, I'm not taking profits yet.
What's your target?
I don't have one. I am simply just waiting to have more speculative hype of an ETF with staking for Solana. And the thing is, for me, is I am at my best when I'm doing long, multi-month long swing trade positions. And I had my fun with my little day trading spots that I did a little bit earlier this year. But, you know, now I'm just kind of back into my old mindset where it's cool. I am trading the big swings in the market. I'm trading rate hikes, rate cuts coming in and riding that wave, which we have until September 17th, until we get the first ones, most likely. And I'm also riding the other big thing that's changing the market, which is the giant plug of ETF money into altcoin ETFs. We're seeing that with Ethereum now because it already has an ETF, but it's really been picking up over the past month and a half or 2 months or so, because now the hype for it getting staking turned on is here. And that's the real hype. That's the real thing that makes the Ethereum ETF different from the Bitcoin ETF, right? So I'm trading that big swing. So I want to see the hype go towards we get close to us getting the ETF turned on, and then I'll take a little bit of profit. There'll probably be a slight cooling down period there. And then I'll buy back in and I'll ride another big wave, because the ETFs will dramatically change how any new asset that has a reason to be bought, you know, it'll totally change its market. And to me, Solana will have a big reason to be bought. Not anything having to do with the on-chain metrics of Solana versus ETH, but it entirely has to do with your APY on Solana is just more. And you're going to see a lot of the ETF investors at BlackRock and Fidelity go to their sales rep and say, hey, I'm looking for an altcoin exposure. I want exposure to crypto. I have some Bitcoin already. What's the difference between Solana ETF? And that sales rep might say a whole bunch of stuff, right? On-chain metrics, and they probably won't, but they'll probably just say, this one makes you 3% a year. This one makes you 8% a year. And then they'll go, well, I'll buy the one that gets me 8% a year. So I'm just really focused on front running that explosion, because I am expecting a big swing of interest towards Solana versus Ethereum. That, and also if you're an insider, you're buying Ethereum and have been for the past few months. You're riding that ETF hype. You're going to sell into that, and then you're going to buy into Solana before it has its ETF hype, because you just know the timing of things. So I'm trying to front run all of that.
I hope you're right. We have some really good questions coming up as follow-ups. The first one I want to address is from Rocketeer. Alex, you hit this in a comment, who says, do you think you could reach financial freedom with the method of, you know, gradually buying, selling, assuming that these aren't like $10,000, $20,000, $200,000, $50,000 buys? You say for sure. Why?
Well, this game isn't about getting one big win, right? That happens for a very few select amount of people, and it's what creates the marketing headlines to get people. Get rich quick is something that has always grabbed humanity's mindset and attention, but it very rarely ever happens. And it happens for a very few amount of people. Like most of the people who went to the gold rush didn't find gold. What they found was bankruptcy. that's what they found. And that's the case with investing in, that's the case with investing in altcoins as well. In this crypto space, most people lose money. And that's true for investing in stocks as well. Most people aren't good at this. And so understand that while we all want to be the best, most intelligent, sophisticated day trader out there, and you get to go live in a different country or wherever, you know, because you're day trading and you have this amazing fantasy in your head, the odds are is that you're not going to be that person. We're all not that guy. You know, we're some of you are going to, and that's amazing. Go for it. Try to be, learn, educate yourself, practice, experience, increase your XP, if you will, get better. But for the 97% of us, 98% of us, having a super simple strategy, but then apply it to the crypto space like Alex is. If you're in profit, just take a little bit. And the incremental gains of, hey, 10% here, 15% here, 20% here, hey, another 10%, another 15%, another 20%, hey, another 10%, another 15%, another 20%. And that exponential growth is going to be so faster than if you were to do that in the stock world. So if you take the traditional method of, say, hey, I'm going to invest in the S&P 500, I'm going to make 7 to 9% every year, and that 7 to 9% will have a magical effect on your money over decades. If you do what Alex is doing over a single decade, you will reach that same goal that you would have reached investing in stocks with that same strategy 30 years sooner. So that is the method to put yourself in a much more likely position to hit financial freedom.
And go ahead.
I was just gonna say, I think that's well said. I've often said, especially lately, that at this point, people like me in my age group, people who have not already been investing for a very long time, or people who have maybe a more aggressive timeline, people who are not just set up, someone who's working on it for the first time, just starting to whatever. You simply have to take more risk than you had to before if you want to get to the same point. That's what I believe. So
Correct.
for this, I tried the first 2 bull runs that I went through. I tried to do exactly what Will said, to replicate I'm going to put way too much into this thing and wait for way too long and lose it. And I just ended up losing it. And this time, to put it in perspective, the entire market right now could fall by 50%, and then it could sit there, and then it could fall another 50%, and every single position that I own would still be in profit. So I've just been doing this for a long time, little chunks, just chomping away at it. It's not a ton, but for example, the little pile of SOL that I'm using for this kind of swing trade thing, it made $1,000 this week. And that's really cool. So
$1,000 a week is pretty awesome.
Yeah.
Where else can you get that?
That makes a huge difference in my life right there, especially at this point. So I feel really good about it. It's so low stress. I was so just mind-blowingly stressed out last time and the time before, just panic checking markets all the time. And now it's I check it, and if it's flat, okay, cool, close it. If it's up huge, okay, sell a little bit, close it. All right, if it's down, okay, buy a little bit, close it. That's it. I just don't want to be stressed out about it. I got way too much other stuff. We're building this business, we're doing all these things, we're live all the time. I don't have time for it. And I've proven to myself that this method works, and I would rather chip away a little bit than take a huge gamble. There's a couple positions that are just kind of sitting there. I don't take profit on Bitcoin. That's just gets added to and gets tucked away, I don't know. That's it. I think it's a really fair question, because to be very honest, I think all of us face that mental block when we're looking at this kind of stuff and we're trying to figure out whether or not we should take any profit, because it's very easy to look at social media and see a picture, a screenshot of someone who just made a bunch of money betting on some crypto, whatever. We have to remember that oftentimes what people do is hold up an instance of luck, present it to all of us as wisdom, and then use it as the selling point for some product of some kind. And I would much rather demonstrate methodical, practical, actionable advice and just, show you that it can work that way. And I don't know, I bullied myself out of taking profit a long time, because I told myself comparatively, I don't have enough money to be thinking about this. This is an embarrassingly small amount, whatever. And then I just had to sit there and be okay, that's stupid. Just get that out of my head. That's not helping me at all.
Mm-hmm.
I want to double down on that a lot of people who are holding for a future date and never going to sell until it gets there, not every asset is Bitcoin. And many people through many cycles have watched their assets go up, but not quite high enough to hit their target, and then held it all the way down. Shout out to my friends who are in the, Cardano community, the ICP community, whatever. There are many people who have been waiting and waiting and waiting. And those people's gains will be outpaced by Alex's strategy for realized gains. It's not profit until you take it. We joke sometimes no, my position's not down because I haven't sold it. But if you are selling along the way, you capture profits, you get more dollars. You can buy more tokens when it dips and get more dollars when it grows again. And that is, realistically often the way that folks outperform others who buy and hold. Buying and holding is a great strategy, but not every token is worth buying and holding, because what are you going to do with it? We were talking in the comments with Bearded, who asked about holding Bitcoin and not selling it. And I mentioned you can take a loan on it. The interest rates are higher now than I expect them to be in the future when this is a more competitive space. But Bitcoin is a deeply liquid asset that is easy to take a loan against, so you never have to sell it if you don't want to. You could check out Bitcoin loans on a platform like Ledn, which is like LEDN. It's like lend, but the HODL version. It's a strategy that works because it helps you actually turn your tokens into more dollars. So we had another question here that I want to address, as people are asking about alt seasons, what tokens to look at. Somebody said, so when it comes to altcoins and altcoin season, tokens we expect to do well, genius mode, should we be looking at altcoins in the top 50, the top 100? How do we determine what tokens now are likely to go up or down in value? Well, all of them? The answer to that is no.
I have a theory, and I think it's a very, very strong one that makes a lot of sense based on particularly how we've seen how the ETF products have changed the market already since the Bitcoin ETF went live in 2023. And that is that we will have an altcoin season, but that altcoin season is going to be very different from the past. So for those of you who don't know, the past altcoin seasons typically lasted like 8 or 9 months. And during that time period, pretty much any crypto that you held anywhere, at least like 90% of them, went up in value. Didn't matter what they were. Didn't matter if their team was being, was suing each other. It didn't matter if the team had previously been hacked. It didn't matter. None of these things mattered. All that mattered was it was a crypto and it was going up in value, baby. And everything was.
Amen, brother. Didn't matter how trash it was.
It didn't matter how trash it was. It didn't matter if it was legitimately a Ponzi scheme that had already done a rug pull. Everything went up in value. And that was the past few cycles. Now we have a very different market, and the ETFs have changed that. So before, you would have Bitcoin go up in value because people were buying it from centralized exchanges largely, or DeFi, and that money was all sitting on chain or on an exchange that could easily go on chain. But now most of the money that's buying Bitcoin, which drives our market, it's that rising tide that lifts all boats, if you will, that's largely coming through the ETF products. And the ETF products, the money that's there, cannot easily get on chain. It can't easily filter down into the other cryptocurrencies, which is why we have seen for 4 years, Bitcoin dominance just go up and to the right for 4 years. And because that money can't easily percolate and flow through the rest of the market. And so what's the big driver of the market now? Well, it's rate cuts, right? That's an increase of global liquidity, which is great for all assets. Great for Bitcoin, it's great for altcoins. But the other big driver of the market are more ETF products going live, because that's the source of big money. And so you have the Ethereum ETF and you have speculative ETFs with staking to be turned on. Granted, Solana has one, but it's a really bad product and no one cares about it. They're waiting for one to be issued by BlackRock or Fidelity. But you have your Solana, you have, there's talks about an XRP ETF, there's talks about a Cardano ETF, and maybe a couple others. And that money, if the ETF of staking gets turned on, let's just say they're become very, very popular, and a lot of money flows into your Ethereum, into your Solana, into your XRP, your Cardano, your Tron, whatever. It's going to be the same problem. That money is still stuck in the ETFs. It can't percolate through the crypto cycle, the crypto ecosystem very easily. So you're going to have the same problem where that flow of capital in altcoin season will be very siloed into cryptocurrencies that have ETFs. Now, the money that is sitting on chain within Ethereum's blockchain, within Solana's blockchain, within the other blockchains of products that have popular ETF solutions, that money becomes more valuable because the ETFs are making it more valuable. So the swaps that happen on chain will lift up the crypto market more quickly. So you will see an altcoin season within those ecosystems, within Ethereum, within Solana, right? Assuming, of course, Solana gets a staking ETF. But because you're not getting that new capital directly into the market, because that new capital is again stuck in ETFs, it's just making the capital that exists on chain more valuable to have a bigger impact. That altcoin market is likely not going to last as long, or it's at least it's going to behave very differently than it did in the past. Because again, that money is not sitting on chain. So all of that is to say, this is going to be a very different altcoin season. You're going to have most of the gains made in cryptocurrencies that have the ETFs attached to them, and altcoins within those cryptos ecosystems will benefit but the odds of it lasting 6 to 9 months or early 8 to 9 months like it did in the past, probably very, 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 very low.
Yeah, and I would encourage anybody to go for homework to CoinGecko or CoinMarketCap, pull up Bitcoin's all-time high chart, then pull up Ethereum's and pull up maybe Solana's, maybe XRP, some tokens that have been here that are big, that are altcoins, and look at when they peaked relative to Bitcoin. I think there's this perception, Will totally nailed it, but there's this oversimplified perception that like Bitcoin has a definite top, and then after some approximate period of time, Ethereum has a definite top, and then after some period of time, no, Ethereum's all-time high, fact check me on this, was 2 days after Bitcoin's. Okay, it was like almost at the same time. Solana's, I believe, maybe was before. One of them was before. One of them was like a week or two after. And then, like Will said, we experienced these sort of like ecosystem parties as money rotated from Bitcoin or to Ethereum or whatever. But it's not like Bitcoin runs, altcoins run, memes run. It's not like that. It doesn't happen like that. If
There's
it was
not a
that
memo
easy,
getting published.
everyone
Like, okay,
would make
guys, it's time to rotate into the next category.
No, some of it happens sooner, some of it happens after. In retrospect, we can kind of see, generally speaking, that when Bitcoin's ready to leave the party, it's like a great party with a lot of your friends and everybody's having a really good time. And Bitcoin is that friend who dips like first, or maybe not first, but when they leave, they are the tipping point. Everybody else starts to wind down. Some people will arrive at the party after Bitcoin have left, but the party is winding down. You know what I mean? Like it's mostly done. It's like a ball that's been thrown up in the air, and as it starts to fall, drags other balls down with it. So be wary of that. Do that for your homework. And then I can't believe our time is going by so quickly. We have another couple questions for you guys. One of them is from Eric for Will, who asks, I've seen a lot of people saying that when we get rate cuts, we usually get a deep dip or correction. In other words, a sell the news event. Got a thumbs up? So why are we bullish on the idea of rate cuts then?
So when you have a known event that's going to be bullish or bearish, bullish, we'll keep the example just to that. You have people who, the market front runs those things. So you have a saying called buy the rumor and then sell the news. So markets like to front run, you know something's going to happen, or you're highly likelihood or suspicious that's going to happen. You buy the rumor, people buy into it, the news drops and people take profits because they're now much in profit. It is, you make more money if you're first to the market about something, right? And that's what happens. The market's very smart. Now, oh God, I lost my train of thought. Did you buy the rumor, sell the news?
And why would rate cuts be a good
cuts,
thing?
Rate cuts. But the thing is if your known event is, hey, we have an announcement and it's a partnership announcement or something, it's like buy the rumor, sell the news, and you can fall back to exactly where you were before. But if the news is something that is fundamentally changing of the market or the tokenomics of a coin, if we're just to keep the example purely to crypto, then that can be a buy the rumor, the bottom was here, sell the news, and now you make a new higher low and the market takes off. Because rate cuts change the macroeconomic picture of the market. It is increasing the total amount of money that is available in the system to be invested in stuff. And you get one rate cut, you're gonna get more rate cuts. And so that pile of money is just gonna get better. The environments that you're trading and investing in is gonna get more and more and more bullish. So because it's not just hey, it's an announcement of something, you're not gonna go to zero. It goes, hey, this is an announcement of something or something that is happening that is changing the market to be more bullish. Therefore, higher low, market continues higher after that point. But that still doesn't mean that you're not going to get a lot of people who play the buy the rumor, sell the news event.
And that sets Alex up perfectly for an answer I want him to give to a great question from Eddie, who asked about ETFs. We talked a lot about ETFs and inflows and the activity we expect to see. Can you clarify, Alex, for us, why would anybody buy an ETF instead of a Bitcoin? Like, I could buy Bitcoin. So why would I buy an ETF?
I'll answer Eddie's question and also that one, because I think
Sorry, Eddie.
correct me if I'm wrong, Eddie, but I think what Eddie meant was, why do the ETFs exist in the first place? Like, why are we making more of these things?
That's what I meant. Oh, okay. That also is a good question.
Yeah. And so from the perspective of the institution or the custodian or the curator of this ETP, exchange traded product, of which ETFs are one type, honestly, it's because this is a really sexy asset class and there's a lot of money to be made here and they didn't want to be left out, and this is how they can participate.
Real quick, when you say left out, it's because they can't necessarily buy Bitcoin, right? They're regulated.
Correct. Yeah. For a long time, it looks like this is kind of changing, but there's a lot of rules about what companies can and cannot do with their money, what they can and cannot buy. ETFs denote regulated and licensed exchange traded products. So it's safer, easier, legal for them to participate in that kind of thing. And then, of course, if you are the curator of one of these funds, whether or not the price of the asset is going up and down, if people are buying and selling your thing, you're making money regardless. So it protects you whether the market is up, down, or sideways. And that's good for them. It's good for their balance sheet. That's why they did it. Now, for you as a person, why would you potentially want one over raw Bitcoin? And to be clear, I do own both. I own Bitcoin because I want to control it. I refuse to call it anything other than raw. Sorry. Okay. I want to be able to like own it and have it where I'm in charge of it, where I am the custodian of it. I am the captain now of my Bitcoin. And that is important to me. However, I also have a Roth IRA retirement account, and what I do inside of that account is capital gains tax exempt. Although you are limited by how much you can contribute on an annual basis. That is different depending on where you are. In the US, it was at $7,000 a year you can put into your Roth IRA. In the UK, I think the limit for the UK equivalent is 20K. I don't know any other countries off the top of my head. I mean, I know the names of countries, but I don't know their retirement account.
Man,
I can name at least one other country.
My dual citizen friend is geographically stunted.
I know. But that's really it. It's just for tax-free exposure. And I do have to shout out once again the best trader in the RiseUp community, my mom. I don't know if she's lurking here or not right now, but my mom texted me yesterday saying that she's loving the price of FETH, which is Fidelity's ETH ETF. And because she bought that thing at $15 and now it's over 40. There she is. There's my mom.
There's the best trader in the whole community. When are we going to get Linda's Twitter account and an exclusive chat in the RiseUp community with Alpha Leaks?
Her Twitter account is the White Whale HL.
Yes, surprise. My mom is the White Whale.
Surprise.
No, but it's just I got a kick out of it because we were just talking about it. And of course, she's taking profit because of course she is, because she's smart. And that's the cool part. Like that gain that she made inside of that account, where I mean, if you're holding it in your Roth or whatever, that or excuse me, not whatever, in your Roth IRA, which is tax exempt. Well, you pre-tax. Sorry, I'm mixing up my tax terminology. It's not tax exempt. You just already paid taxes on it. So now you get to play with it and you get to earn money on it for free. And that's awesome. Limited in amount, but the upside potential is great, especially with an asset class that could potentially return like this. So that's why you, as a person, might want to buy the ETF product over spot. But to be clear, I do both.
I do both. Mm-hmm. Are you referring
to
the Rocketeer's comment, which says, "I am the captain and I am going raw"?
All of it, dude. All of the above.
Sound right to me.
Wait, no, that's not the quote. Oh no, I don't like this.
Well, I mean, it could be much worse. I mean, I've said before that, whether you're buying Bitcoin on an exchange or you're buying it through the ETF or you're raw dogging it on something else, then, that's just the way that it goes.
What a phenomenon of language. If you are listening
I love words.
Let me remind you, we are live Monday through Thursday, 7 a.m. Central Standard Time. We are live Wednesday nights at 7 p.m. Central for RiseUp After Dark. And tonight on RiseUp After Dark, after much rescheduling and much anticipation, we get to welcome our friend Evan McMullen back to the show.
Allegedly.
Co-founder, allegedly, over at
Allegedly.
We'll find out. She's been very busy lately. She's co-founder over at Billions. She is a guru whiz on all things decentralized identity and makes the complex clear. It's gonna be a great conversation, so we can't wait to have you. We've also got RiseUp Market Watch Monday nights, 7 p.m. Central Standard Time. And again, your reminder, if you haven't already, jump in the community. It's where the show lives 24/7. It's the best place to ask your questions, share what you know, learn, grow, and we say Rise Up. You can find it at RUMS, RUMS, like Rise Up Morning Show, HQ.com. It's the very first link at the top there below. Join our free educational community. Would love to see you there. And let me remind you, this is Web3 101 Wednesday. So if you've got a question, we want to hear from you. Alex and Will have got to go in just a second, but I'm going to stay here and answer any question you have felt silly to ask anywhere else. One I saw in the comments is, does my crypto change in value if I stake it or send it to a cold wallet? I'll answer that question. And anything else you might want to know about the tokens we love. So Alex, Will, as the folks give their questions for you, have you got final thought, topic, something to think about, homework, predictions, raunchy epithets, anything?
So
Not
one
too
thing that's
much.
interesting, because it proves that I am a genius, is that the NFT market cap is skyrocketing. It is at what, 8.5 billion. It's close to $9 billion right now.
Well,
Up from where it was at about $3 billion just a few months ago. And my theory has been that as you see Ethereum skyrocket, human greed will cause people to speculate on NFTs again to try to find a way to compound on the Ethereum that they have. And we're seeing that NFTs are going up in value again, gaining interest, which is interesting. Alex, what is your finger?
don't forget that the NFT market cap will also climb automatically when ETH increases, simply because no one is going in and resetting floors on all of these gajillion projects and 20 million NFTs that are currently listed for sale that are all becoming more expensive passively as ETH goes up and their prices are not being adjusted.
And that will drive people to speculate on them.
Yes.
Good point.
Will,
Also,
can you? I have a question for you.
Someone here has to know about the Monero 51%. I just want to make sure that's on the agenda. But
Yeah.
yes, Alex, question.
This one was for you, Will, just because I know you've talked about this before. Someone was asking about Sol ETFs and if you should wait for a better one. And I'm assuming that this was with regards to the one that exists currently, which I know you've made a video or two about. Can you remind us why that one is not good?
I don't remember everything. I'd have to go back to my video again because that's like 7,000 videos for me ago, even though it was a month ago. But the biggest issue there is that there's no liquidity, which is why you'll have no big money people drive to it. So there'll be zero interest. But there's also a bunch of additional fees and a whole bunch of tax implications because it's not being issued in the right format of what an ETF is supposed to be. So if you buy into that Solana ETF, sure, you can front run things, but there's going to be multiple tax implications throughout the year, even if you don't sell it. And it's because of it's being offered through the C Corp as opposed to, I forget everything, but what I did say is true. There's a lot of tax implications. It's going to be really annoying. There's very, very low liquidity there. So it's not a very good product.
Well, you mentioned the 51% attack, and I am glad to read people in on it if you need context, but the floor is yours.
Yeah, I know nothing about it. I just saw it on Twitter and I was like, is this real or is this not?
So there's a new project, a new-ish project called Cubix, Q-U-B-I-C. They're a layer 1 blockchain founded by IOTA co-founder Sergey Ivancheglo. Shadowy figure, dubious figure. I think he's contentious and controversial, but he's considered an OG and a genius in our space. And they're fast, they're cheap, they use useful proof of work. Oh my God.
My God, it has music.
For all our friends in podcast land, Solom, the chief gift officer, just threw a party for us. Thank you very much, Solom. They, between May and now, have dramatically ramped up their participation, Cubix participation in Monero's network. What started as having 2% of Monero's hash rate, and step back with me for a second, blockchains, they're just ledgers, checkbooks basically, that all the members of a network share, maintained by different computers around the world. If you want to control a blockchain network, it stands to reason you need to have the most of the computers running a particular network's code. So when I say hash rate, I just mean that they are processing the transactions for this network went from 2% to about 50% recently. Beyond 25% for the first time in early August. They claim to have surpassed 51% of Monero's total mining power. And this would allow them to compromise a network like Monero, because on Monero, which is a proof of work blockchain, the miners create new blocks. So if somebody has most of the power to create blocks or maintain the record, they can override the rest of the records on the chain. They can say, hey, actually, I am the captain now. I've got 10 million trillion Bitcoin, and all the other records can say, no, you don't. And it'll say, sorry, majority rules. See you later. That kind of thing. Monero is an important token in our space and chain in our space for what it does for privacy. And a 51% attack at this magnitude has never been effectively carried out. It would be tremendously expensive. And there are countermeasures people could take. It's not happening. It could. So that's what's going on. Did you care to comment?
Okay.
Good overview.
No, I mean, yeah, it's a good review. Appreciate it.
Yeah, big time centralization risk exposed, and it could cause trust in the network to erode.
I do have a comment. Of course, this is happening to Monero because the powers that be cannot afford to have a privacy coin.
I know, that's what I'm saying. Like, we're losing all of it. We really are at risk. It's a serious risk. We're not at war yet, but
I thought it was just going to be, we will never allow a centralized exchange to list Monero. I didn't think there'd ever be a 51%. I've been saying for years, privacy coins don't have a good future for them. But I've been saying it for years and years. When Monero was hot, I was like, governments aren't going to like this. And I didn't think there'd be a 51% attack. I definitely think it's government orchestrated.
Maybe.
Yeah,
I don't know about Ivan Cheglov's connections to the government, but again, I think he's kind of a controversial shadowy figure.
There's got to be a poly market on that, whether or not that's bullshit, like manufactured.
Yeah. It's tough. Cubix has claimed that it is a deliberate experiment. So intentional.
Deliberate experiment funded by the CIA.
Deliberate experiment to crater the privacy coin.
I don't know.
Anyway, I can still answer one or two questions, and then I have to go.
Alex, do you have a final thought? Because I know you got to get out the door.
Well, I was going to say, actually, I can radio show, call in from the road kind of thing. Because I mean, what I mean by have to go is I have to go drive for the next hour and 15 minutes.
Okay.
So
my
final thought.
Podcast land are the real heroes today because you're getting all kinds of sounds.
All kinds of sounds. Well, I'll be.
I can bring the cicada. I can put my phone outside and just let you guys listen to the cicadas.
Nature sounds. Go ahead, Alex.
I mean, the final thought for this portion of my appearance today on the RiseUp Morning Show is just that I stand by what I said. I mean, taking at least a little bit of profit is not a bad idea. Consider paying yourself back for making a good move, for having conviction, for it paying off. It means more when you pay yourself. Plus, you don't have to sell the whole thing. You don't even have to sell half of the thing. You don't even have to sell a third of the thing. You could sell literally a 20th of the thing, and it just kind of gets in that like repetition pattern, this idea of like when the market is up, I react. When the market is down, I react. And keep it pushing that way. I did also just want to say, just because I saw a couple comments, what the hell is Genius season? I think this is brilliant. I'm totally going to make a video about this because I love it. Genius season refers to the phenomenon in crypto where a bunch of stuff starts errantly exploding in price, and then a whole bunch of wieners from months and years past start making content about how they are geniuses because they totally called it when they were just throwing darts at the board and then got lucky. And that is exactly what I mean when I say, watch out for people holding up instances of luck and presenting it to you as if it is wisdom and using it to sell something. Even if the selling something is not pay me money for this thing, but instead like give me your allegiance because you would be better off if you were following me. That is a common trope in this space that like, wow, if only you had been paying attention to me and following me and here instead of elsewhere, you really messed up by not being all over my content. So
follow and worship me. Fawn over my tweets.
Exactly. Be careful of that.
Please, when I make my next mistake, when I ask you for a financial donation to continue being able to feed myself because I actually don't do as well as I say, please give me your money.
And then on my way out the door, I will answer Crypto Boat's question, and we can talk about it more when I come back. If you put the profit in USDC, will it not be taxable as long as you leave it there? No, it is taxable. Anytime you exchange anything for anything, it is a taxable event. Unfortunately, even if you keep it in crypto, even if you change it into another volatile crypto, if I was trading my Sol directly for another token on the Solana network, or my ETH for another token over there, or something like that, you are still realizing profit even if it's in a different asset, and it's tracked based on the dollar value of the thing that you buy and sell for whatever you buy and sell. Every time you buy, or excuse me, every time you sell anything into anything, it is a taxable event, unfortunately.
Speaking of taxable events,
USDC is the dollar.
speaking of taxable events, Alex has a tax app. That is all.
I do. You want to see it?
He does. No, Alex, get out of here.
Like in a trench
go.
coat, you know. We'll see you in a second, Alex.
Yeah.
Oh my gosh, Alex has a tax app. Yes, he does. And if you've got a question, this is your place for it. Helpful news, commentary, answers to your crypto questions. I will take a quick second to answer that question we got a couple minutes ago. It is false that if you move your tokens to a wallet or if you stake them, that they will not go up in value. Because here's the thing. I talked about that ledger, that network of computers a second ago. Your tokens only exist digitally. They don't physically exist anymore. They're not in a bank vault. They only exist in like a file, a record that is shared by all these computers that maintain this transaction, this just a straight record of the whole blockchain. All the transactions chained to each other in chronological order so we can tell who is entitled to own what. When you send assets, you are reassigning them. You're crossing them out on your balance, and you are sending them aka reassigning them to someone like Will. You know, Evan has 10 Bitcoin, -1 Bitcoin, Will +1 Bitcoin. And that's how it works. They only ever live on that record that one of the computers will receive, validate, broadcast, and then all of them will update as part of their, different copy of that record. If you're staking, you are temporarily reassigning, not necessarily ownership, but the right to use your cryptocurrency tokens on some networks for the process of staking, validating transactions. It is always yours. And it goes up and down like every token in the market, no matter where you access it from, on an exchange, on a cold storage wallet, whether it's staked, whether you're lending it. Good question. And the follow-up question is, Will, how do they track our trading activity?
Yeah, I was going to address 3 questions and then I got to go. One was, how do they follow our trading activity? You, more likely than not, by more likely than not, I almost guarantee it, first invested by taking your money, your cash that you have in your bank account, and buying on a centralized crypto exchange. Or maybe you bought through PayPal, or maybe you bought through some other on-ramp that's a Web 2 centralized solution. That information shared with the government, shared with the IRS. They then take that money onto the blockchain. The blockchain is public. Everyone can look at it. And they just go, okay, where did they take that money from their account? Oh, they went here, and then they went here, and they went here, and they did that, and they did this, and they did that, and then they sold. Okay. We know how much you owe. It's, that's the beauty of the blockchain, is that it's public. You can just track every single move that you do, that if everything happens. There's also some negatives to that too. One of the reasons why privacy coins are cool, except they're being, purposely attacked. So that's it. That's how they follow you. They can track everything you do on chain.
And you said 2 other questions.
Another question was, Will, what price are you looking at for your top 4 coins? I'm not looking for a single price. I don't care what price anything gets to. I care about percentages. And honestly, if anything's over, because I do long macro swing trade positions, if anything's over 40%, I'm happy just taking a little bit off. I have 0 price point that I'm waiting for, because in the past I had price points I was waiting for. And if I didn't reach that, I didn't sell enough, and then I didn't make as much money. So waiting for a particular price is really dangerous, because then you're like, I'm not going to do anything until that price. Screw that. Look at percentages. Percentages are the only thing that matter. Keep getting multiple percentage gains. If you're up, set yourself a rule. If I'm up 20%, I sell 10%. And if I'm up another 10% after that, like double digits moves, I sell 5%. You know, set yourself simple rules like that. Don't wait for a price point, wait for percentage gains and sell there. And make it a little bit more conservative than maybe you're thinking in your head. Okay. And then the other question was, what was it? Oh yeah, it was just like, you know, taxes are different in every country, you know? So there are some countries where you do have 0% tax on crypto gains. So just make sure you're looking up your taxable, you know, regulations or rules or what have you, whatever the word is for your specific country. With that, I gotta go. And guys, remember, you win in this market by getting some small wins. But remember, in the stock market, it's considered a great year if you make 7 to 9%. In crypto, you could make 10% 4 times on 4 trades throughout the year, and you would be a top 1% trader in the stock market, right? Like put that into perspective. We all want to get rich quick, yes. But if you just make 4 trades that do 10%, 10%, 10%, 10%, you end the year, you are a top 1% trader on Wall Street. You're better than Nancy Pelosi with all of her insider information in the stock market, okay? Like put that into perspective. So with that, I gotta go.
Beautiful.
See you guys later.
Ladies and gentlemen,
Mwah.
Mr. William Watson. Thank you, Will. Good to talk to you. Hey, and your favorite show is not going anywhere unless, of course, your favorite show is something else other than the Rise Up Morning Show, in which case I would understand. It would be totally fine. I love that guy too. If you're here with me live in the comments, don't fret, don't sweat. We have still got about 30 minutes of the Rise Up Morning Show left. Alex is coming back, and we've got great questions on tap. Solom asked, what is digital residency, and how does it benefit crypto users like you? Well, digital residency, it's a set of frameworks, mostly imposed by governments, to say this or that person is a citizen of this or that country, maybe a landholder, a registered occupant, something like that. We use government IDs, passports, driver's licenses, deeds to track this kind of thing. And it is beneficial for cryptocurrency traders because regulations are different everywhere, and not all products are offered to all people in all places. For example, I used to love this exchange called KuCoin. It's a centralized exchange that offers a couple more flexible like trading parameters than, say, Coinbase. However, they were not licensed to provide services to people in the United States for a variety of reasons. And once they implemented new KYC standards to comply with this law, I was off the platform. I couldn't trade stuff there. They would lock my account. They would freeze it. And yeah, Joey says it. I used to use KuCoin all the time as well. I loved it. I was so sad. But if you have proof of residency or identity from another country where it is okay, then you can complete the KYC, know your customer process, they're legally required to comply with as a resident of another country. Some popular residency programs even allow individuals who don't technically live somewhere to get a state ID card, like Estonia has an e-residency, and they're very crypto friendly. Palau offers a very famous digital ID. You can go online and Google Palau ID, and you'll find about 10 results that for $250 will give you an ID card that proves you are, identified by a Palau. I don't know what the jargon, the nomenclature for it is, but what I want to tell you is it's not like a catch-all, fix-all for any particular every solution. If I got a Palau ID, I don't believe it would allow me to complete KYC on KuCoin. I don't think it would work for MEXC, another popular exchange that people in the US cannot use. I don't know that it would work for Gate.io. There are many crypto products and services you might care to use that are difficult for you to use unless you can prove you don't live, unless you can prove you don't live in a place where it's legal. So start your exploration by checking out the Palau ID. Then I do recommend checking out the Estonia digital residency. And you might even consider, if you're just really married to crypto, moving to a place like Portugal. But for everybody who's not able to do it, there are plenty of compliant tools. Just Google Palau ID or Google Estonia e-residency, and you will find more information than I could give you more helpfully in less time. That's your homework. Good question. How do we access the last 3 exchanges you named? You need to be a person who lives in a place where you are legally allowed to complete KYC, know your customer, for those exchanges. Gate.io is mostly an Asian exchange. MEXC is, I believe, available to European traders. The United States doesn't have access to a lot of different platforms. I don't necessarily think that's a cause for concern unless you're looking to buy some obscure token. For example, I was trying to help somebody buy, what was it? It was an X token, XTM, XL, XDC, something. And they were having a terribly hard time. And I was like, why do you want to buy that token anyway? Usually, if a token is only offered on an exchange like that, that's a signal to me I probably don't need to worry about it, because every time you want to trade it, you're going to have to go through all kinds of hoops. You're going to have to turn your VPN on. You're going to have to find a place that doesn't require KYC. You're probably going to be dealing with low liquidity, meaning there might be big fluctuations in the change of price. You might experience a frustrating hold, a regulatory change that like bars you from the platform. So I generally recommend to people, unless you're like a level 5 person or you are living in another place where it's easy to get access to that product, just not to mess with stuff like that. You're not going to miss out on life-changing wealth because you didn't jump through every single hoop to get that one token, that one time on that one exchange. I promise. Good question, Solon. How do you think ETH is going to do in the near future? I think that ETH is, of all the competitors that are building Web3, ETH is the most fully developed network that is sufficiently decentralized. It's got use, adoption, it's got tremendous infrastructure, and it has scaled farther than anyone. It's a blue ocean, and Ethereum's boat is way out in front. It's got a fleet of layer 2 networks that are around it like an armada. Solana is trying to catch up. Other networks are trying to catch up to single use cases that Ethereum offers, but nobody is a full suite backbone of the future internet, secure, decentralized package like Ethereum is. And I think, therefore, as usage increases, their token will continue to go up in value. I also think that at the stage of the market that we're in terms of like its speculative value, that everything depends upon Bitcoin. Last cycle, Ethereum's all-time high happened 2 days after Bitcoin's. And then the party was over. Like, we were on a downtrend. There were up spikes, but mostly it was long-term down only. So historically speaking, so much depends on the little red wagon, aka Bitcoin. When it decides to leave, the party is over. What do I think about PulseChain? I think there are other tokens and ecosystems that are a better use of your time. I think it's highly centralized. I think it is mostly dubious. I think there are some people building in that ecosystem, but I think compared to an ecosystem like Ethereum, I just don't think it's worth the investment of time or attention. Why did the market not care that the Pudgy Penguin NFT got added to public treasury companies? Well, because sometimes even a major news event isn't enough to move the market. You've heard the saying, buy the rumor, sell the news. Will said it on the stream here. And indeed, a big thing like that can be a sell the news event, or can create a lot of sell pressure as people who are excited about it, they see it as a local top. You know, the big thing has happened. The party is never more popping than when the ball drops, but there are also a lot of people who are leaving as the ball drops because they want to beat you to their car and get into traffic before you do, before everyone at the party leaves. So often big events like that don't translate to big gains. It doesn't tend to work like that. Back on the show, on his drive to Tybee Island, ladies and gentlemen, Mr. Alex Popovich. Welcome, my friend.
Thanks. It's good to be here. Thanks for having me.
I thought for a second you were a scammer, an impersonator, and I was, because you were just quiet for a second on the road, and I was like, oh, damn it, he rugged us.
And yet you left me up here. That's that's commitment.
I was going to find out. We got a couple more good questions, and Alex and I will help you answer them. A reminder, this is Web3 101 Wednesday. We've been answering a lot of current event questions, but if you've got a question you're shy to ask, you feel like, people say this a lot, is a stupid question, there's no such thing as a stupid question here. Thank you, Queen, for the question. Hi, GM Queen. I bought a Ledger Nano bundle. I haven't opened it yet. I don't know if I should store my stuff on it. Alex, any considerations as to whether or not you should use Ledger or cold storage generally?
I mean, I think it kind of just depends, as it often does. on what you want to do and how you want it. I would say that before you put anything there, you should fully understand why one might use cold storage or why one might not use it. I can tell you that personally, anything that I would be really sad to lose, or anything that I plan on keeping for a long time, goes on cold storage for me. So, my Bitcoin that I'm not planning on selling, I don't take profits with, all that sort of stuff, that lives on cold storage just because then it's easier. I don't have to think about it. I have a process, but you're going to want to make sure that you understand the process and how it works to send things there and how it works to retrieve things from cold storage should you decide that you would like to. And I mean, should you? I couldn't say one way or the other, should you or should you not. I believe that everyone should understand cold storage. I believe that everybody should be familiar with it. And I believe that people should have it as an option. But, there's also responsibility attached to it. If you lose the seed phrase, the recovery phrase to that wallet, you're kind of shit out of luck. There's nothing you can do about it. There's no forgot password option. There's no customer service department that's going to ask you your mother's maiden name and then send you your seed phrase back. Like, if it's gone, it's gone. And so that heft, that responsibility might not be what you're looking for. And you might rather, for now, just use a company that helps custody your assets, or a software wallet that has maybe some sort of recovery option or something like that.
Good points. A few more to consider, because I saw Queen added some helpful context that she is an XRP holder and she also bought Arculus. Thanks for the additional information, Queen. Generally speaking, if you're wondering whether a cold wallet is safe or good, here's what you need to know. Most cold storage wallet devices that you find in a Google search, if you Google crypto cold wallet, you'll see Ledger, Trezor, Arculus, Elipal, SafePal. You might see Lattice. You might see some others. If they are in a Google search and you can verify from the Google search that they are a legitimate company, like with a website that ends in probably .com, if they have Google reviews, social media presence, and you're confident that they're real, or you ask your friends in crypto like us and we tell you, yeah, they're a legit company, then that checks your first box, okay? You didn't just hear about it in a DM one time on social media because somebody said you need to upgrade to this wallet, your tokens aren't safe. It's a scam. If it's a legitimate wallet, the second criteria is, does it support the networks and tokens that you want to use, that you hold currently? And this is an important box because not every wallet supports every network or token. In fact, no wallet supports every network or token. This is because they have different infrastructure, different codes. These wallet companies, when a new network launches, have to do the manual work to make their software compatible with that network, its private key structure, and so on. So these big companies, they mostly support a lot of the major networks and tokens, but you may find that they don't support yours. The best place to find this information is to go to their website directly. Most of them have search features, and they'll have a page that will tell you what assets or networks they support. And if they don't support them, we say natively, meaning like out of the box, how, if it's possible, you can add support for those networks or tokens. The third consideration, you got a wallet that's legit, that supports the networks and tokens you want to use. You're going to go to YouTube and you're going to search all your final candidates. Look for tutorials for an Arculus wallet and a Ledger wallet and a Trezor wallet. Let's say those are your top 3 choices. You want to see somebody take this device out of the box and use it, so you can get a sense of, is this easy for me to use? As an example, I have here, for the people in podcast land, my Ledger Nano X. It looks like a USB stick. It's got 2 buttons on it. And when I press them, I have to press them both to turn it on. It's got this tiny little screen. If you are a visually impaired person, this might be a difficult device for you to use. If you are a person whose hands shake, this might be a difficult device for you to use, because it's like using one of those remotes that has an up, down, left, right arrow on your TV, and you're trying to type in The Lord of the Rings on Netflix, and you got to hunt for the T, down, 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 right, 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 right. Oh, damn it, I went past it. You know what I mean? It is a little cumbersome for people who might prefer a smoother less touch-oriented interface. Alternatively, I have an Arculus wallet. This, for people in podcast land, looks like a credit card. It's got an NFC, near field communication chip inside of it. And it is able to generate private keys and store them securely on this device. And through near field communication, can securely verify them for the purpose of signing transactions. Both of these devices come with an app that connects to the internet that allows you to set up a transaction and then require you to do the action of verifying your key. We call this signing on the device by completing some sort of action, pressing buttons, tapping the phone to the back of your card. You want to see people use these devices on YouTube because that's going to tell you, okay, great. Maybe Trezor supports my networks and tokens, but it doesn't look easy for me to use. That is not going to be the wallet for you. The best cold storage wallet for you, it's a one-size thing. Excuse me, it's not a one-size thing. Is from a legitimate company. It supports the networks and tokens you want to use, and you find it easy to use it consistently well. That is always going to be a more secure wallet than anything anybody can sell you that doesn't support your tokens. Out of luck, Chuck. Or that you find hard to use. Great question. Tori added some context, looked it up. Near field chips are powered by electromagnetic induction. Other secure methods of communication that don't rely on the internet would include Bluetooth. Ledger devices often use Bluetooth, which is like radio wave technology. You can also technically use pencil and paper to sign a blockchain transaction. It would be cumbersome. It would not be good to use at scale, but you can do it. For the people who wonder, how would we use crypto if the internet went out? Oh, and what a great question. Jen Bear, is that your name? Asks, what happens if you destroy the device? Alex, he's coming back up. While you come up, I want to tell you, I have an idea for a video that we need to make the next time we're all together. I want to do a Mr. Beast style intro with a lot of sensationalism where we say, this ledger device belonging to this man has $10 million on it, and we're going to run it over with a truck right now. Like, that's going to be the hook for the video. And we'll have some guy in a suit, you know, with like a smiley face over his face. And we'll prove that the wallet.
In a suit with a smiley face, do you mean Will?
Yeah, absolutely will. And we'll go to the blockchain and we'll prove that it's a, you know, this is this wallet address, whatever, or at least we'll make it look like it's that wallet address. And then we'll make it all dramatic as we literally run it over with a truck. And maybe we set it on fire and maybe we hit it with sledgehammers in order to prove that all that matters is not the device. What matters is what it protects, your private key. When you create a new wallet, what you are actually doing is generating private keys for the networks you want to use. These are like your username on a blockchain network. They allow the computers that run each blockchain to distinguish you and the assets you're entitled to from every other user. You might have more than one private key. You can generate them. They're free and they're abundant. If every person on earth spent the rest of their lives generating private keys, we wouldn't run out for billions of years. Literally billions and billions of years. FedEx uses them for tracking numbers. You know what I mean? Like they're plentiful. And so when you create a new wallet, you are prompted to back up a piece of information called a seed phrase. This is a part of the cryptography that makes cryptocurrency work. This is a series of 12 or 24 words that can be used, presented to any wallet interface because they're all running the network protocol's code to restore your private key. So that if your ledger gets destroyed in a fire, run over by a truck, eaten by a bear, or Alex grabs it and runs away quickly with it, that you can confidently keep your assets safe because the device doesn't matter. The seed phrase that you write down, that you back up, that you remember, and the private key it recovers is what entitles you to ownership of your crypto. If you can verify that, you can move it. This is also why we say not your keys, not your crypto. If you ever go to a website that asks you for your seed phrase, for your private key, to sign a transaction authorizing use of your key, you are giving that person total ownership and control over all your assets. A lot of scammers will target people this way, and they will prompt you to go to a website that looks like maybe a wallet you trust and enter your seed phrase to back up or restore your wallet. But often these websites are not legit, and all they want is that seed phrase. You don't even have to send them the crypto because getting that information allows them to whoop load your wallet in another device and just suck everything out. So you got to protect that information more than you got to protect this device. The battery on this will fade. Your friend might eat it, whatever. But your seed phrase, that's forever. As long as a blockchain operates, somewhere, you can recover your wallet using that. Go ahead, Al.
Another interesting question: can you store your or your keys on more than one device? Which is a great question, and the answer is yes. If you have Evan's got his Bitcoin on his ledger, and he travels and he leaves it at home. He doesn't travel with it, but he knows his recovery phrase. And something happens, and he's on the other side of the planet, and he needs to get access to that Bitcoin. He can absolutely import that wallet into another device, do the transaction, and he could then wipe that device or just take it back with him or whatever, and then he would have two. You could do that to more than one. It does not. The device is simply the tool that you use to access it, but nothing is actually like living there on the device permanently in a way that cannot be accessed by somewhere else. Like the thing that matters, like Evan was saying, is the encryption, is that password, that seed phrase. But you can absolutely use it from as many devices as you want.
Alex, do you have any experience with the metal seed phrase storage options? ISY wanted to know.
Yeah, I think it's personal preference. It depends what you like.
For folks who don't know, this is like a fireproof punch card made of metal that allows you to like punch the words in your seed phrase instead of writing them down on a destroyable piece of paper. Sorry, go ahead.
Yeah, precisely. I mean, you can. There's all sorts of different ways you can do it. Basically, I would say whatever works best for you that is not storing it digitally, that is not taking a photograph of it and keeping it on your phone's camera roll, or something like that. Someone made a great point on a video I saw yesterday, which was just, we will take the time to lock the front door to our house and set the burglar alarm and lock our cars and all this kind of stuff, but no one ever does any thinking twice before connecting your cell phone to public Wi-Fi and then opening your bank account app. So you never know what kind of internet you're connecting to. You never know what sort of vulnerabilities exist. I mean, I'm not a cybersecurity expert. I just, have my basic tenets of good practices. So whether you like the metal option or, writing it on cardstock and keeping it in a safe, or carving it into wood or etching it into stone, or who knows, whatever works best for you is the best option. Just please don't store it digitally.
Tori said she might even be able to make them herself. And I'm saying, yeah, you should check that out. Could be the side hustle, could have RiseUp co-branded metal punch cards. You could even store it a variety of other ways. Like Vitalik Buterin, the founder of Ethereum, supposedly has he doesn't use seed phrases, he uses private keys for his Ethereum. And supposedly he has half of it written down on one piece of paper in one location and another half written in another location. And it's not that you'd have to put them together, it's that you would have to know the method by which to unencrypt them. Those numbers themselves don't form his private key. Only he knows the method by which he can combine these two pieces of paper and then recreate his key. I think that may be a little much. Vitalik, of course, has got hundreds of billions of dollars, but exactly. We also had a question about Tangem from Doug, who asked, doesn't Tangem have a card and even a ring? Oh no, he's telling me talk about it. Yes. Arculus and Tangem function very similarly. Tangem has an opinion about seed phrases and offers an option for people to use their cards without one. Tangem might be a good option for people who are more concerned about being able to custody a seed phrase and want some assistance with that. The downside is now you have to trust that company, their encryption method, or that somebody won't find another sort of vulnerability to compromise the seed phrase because you are trusting other people to help you store it. A device like this, your Arculus doesn't have your seed phrase. It generates it securely on this device. Same thing for Ledger. Ledger, the company, doesn't have a way to access your seed phrase. It's on this device. Tangem also has a ring that fulfills the same kind of function. You can tap it to transact with your crypto. It all comes down to what is the best for you. That's going to be the wallet that you should go with. Amso said, listen to this, Alex. Catfish and Crappie says about their seed phrase, I write down my seeds by hand, laminate it, then store it in my safe. Great. Amso says, I wrote mine on a billboard. I love it.
Where is that billboard?
Yeah. Do you have direct coordinates so that we can find it? I mean, protect it. Let us know where you keep your seed phrase. Let us know what questions you have. If you're enjoying the show today, then I want to invite you to come back tonight for Rise Up After Dark. It's going to be a great show with Evan McMullen. Tomorrow on the morning show, we are going to do a big artificial insanity segment. We're going to talk about Alex's tax app, of course. We're going to talk about AI-induced psychosis. We're going to talk about the recent AI agent hackathons hosted by OpenAI, makers of ChatGPT, and Y Combinator and the products that people built. And I'm going to highlight a product by one of our friends, Tech CEO, the AI Crypto Directory, a totally free to use. Got to give him a full round of applause for that. A totally free to use, but you can scale it with premium features, directory of crypto tools. They've got over 300 resources, reviews of different kinds of things you might play around with to enhance your life with AI. Or if you're a crypto user, to use it more confidently, more safely. So shout out Tech CEO. That's AICdirectory.com. Good friend of the show. Great building solutions for everyday people like us. Way to go, brother. And he's the number one salesman of the Rise Up Morning Show mug. So, that's definitely worth something. Okay, a couple of questions and some comments. Alex, first of all, Jer Bear's friend is building a house on Tybee Island. If you need property management for the house, I know a guy.
Yeah, let me know. And curious, you don't have to say it publicly, but I know every inch of that island. I'm curious which house it is because there's not that many being built right now. Super nosy.
It's probably right by Ansel's billboard.
What I really want to know is it over on 4th Street? Because that would be pretty cool.
That would be pretty cool. Alex is on Tybee.
There was a question from somebody who was talking about feeling the FOMO, which feels like a good thing that we could address. So I think the setup was sold Arrow a while back. It is now up significantly from there, feeling a lot of FOMO. Advice on handling it or what to do from there. I would honestly say, like, if I because this is not an uncommon question. I totally understand. I can absolutely relate to exactly what you're feeling right now. I've been there many times. Genuinely, what I would say is that if you have conviction and believe in that project and its potential to go up, it very easily could continue to go up. I would not be surprised if Arrow continues to rise. I don't know what it will get to. I'm not a price prediction person, don't have a crystal ball. If I did, I would be a little bit better off than I am right now. But just know that at this point, buying it is riskier. As the price goes up, the risk goes up. So as long as you're comfortable with the fact that it could go down and you could hold a position in a loss in the short term, don't be surprised if it cools down for a while, because it's gone on a pretty monumental push over very recent times. So that is extremely possible. Again, not to say that it can't go higher, just be aware of the risk. And if the only reason that you're feeling like you should buy more is because of that kind of like panic instilling FOMO, like, oh, man, I messed up, I screwed up, like this was bad, that's not a reason. That's not a reason to buy. And I would say that if the only reason is because you're chasing just the potential to get a gain somewhere, there are probably safer, less risky options, which would be worth at least being aware of before kind of making a final decision there.
What are some of the safer, less risky options? I know you're not speaking in specifics, but like, what would you look at to qualify that?
I mean, if we just take Arrow, I don't know off the top of my head, Evan, maybe you can look what it's done in the last couple of weeks, but I think it's a pretty significant percentage increase. So, I mean, what I mean by less risk is, you know, other projects that you have high conviction in, other things that you believe in, other things that are, you know, strong, fundamentally interesting, you know, potentially good projects that have not done whatever Arrow's done in the past 2 weeks. I mean,
Yeah,
you know
it's at
off the top of your head?
$1.36 right now. But more than that, what I would
Jesus.
highlight to you is that since April, it's gone from under 50 cents, and it's done, like, you may not see my screen,
Yeah.
but it's like up, down, up, down, up,
Yeah.
down, and it's had pretty dramatic swings in both directions. So you're probably not going to it's probably going to dip again. If you have conviction in its future, you should buy into strength, meaning it's showing higher highs and lower lows. Like, it looks like it's going places. It has higher highs in the past, and you should wait for it to dip. Don't buy as the green candle is moving. And to people asking about ETH, we said this earlier, and the same advice applies here. It would probably be it's risky to buy right now when it's moving up
I mean,
almost at the
you
all-time
said
high.
$1.36.
Yeah,
So I mean, it was like, I feel like a
39.
week or two ago it was 70 cents.
Yeah, that's right.
That's crazy. Okay. Yeah. So if we're looking at something that is like more than 50% up in a short time, then that's definitely a risky thing to buy into at that point, unless you have a higher risk tolerance. You're okay with it going down in the short term, like all of that sort of stuff. Like I would personally be looking elsewhere. To accumulate things personally. But
Yeah.
I mean, I could be wrong. It could double from here. You know, you never know.
And this is a really good episode if you're asking about, should I continue holding this? Should I buy this? Should I sell this? If you're just joining us, or if you've been here the whole episode, but you're asking that question, I would really encourage you to go back and listen to the recording of this on your favorite podcasting platform, or check it out on YouTube, because this question is answered in much detail in this episode. This question of, should I hold? Should I sell? I'm waiting for this target. Talking about how to take profit, learning how to take profit, building a strategy and a system for yourself is an important journey for every investor, but especially in crypto. I think the summary, the TLDR, Alex helped me out here, is most people we know who lose money on good tokens lose money on good tokens because they are waiting too long to sell. They're not selling on the way up or in between peaks and valleys. They are only thinking they will sell when it hits whatever, an all-time high or many years from now, and end up doing what we call round tripping, which is where you buy an asset, it goes up in value, and then it goes all the way down, and we enter a bear market. The people who make the most money on the big tokens that are the least risky, and also on the small tokens that are quite risky, are the ones who are not hesitant to sell. When you sell, you don't have to sell every token. It's not a 100% thing. We call this dollar cost averaging, or I saw in the comments today, TPI, take profits incrementally. This is the practice of seeing that the arrow you bought at 70 cents is now up at $1.30, or maybe the arrow you bought at $1.50 has gone down to 70 cents and is now up at $1.30. Even though it costs less now than you paid for it, this might be the highest it's going to go, at least for a week or two. You might consider selling some in order to buy it when it dips again. If you sell that $1.50 arrow token for $1.39, it dips back to 70 cents, you can buy so many more. You can use that same money to get more arrow tokens than you were holding when you paid $1.50 for them. And now, even though you took a 10-cent loss here, you've made up for it by buying almost $1's worth of dip. And if you do that again and again, or even at smaller peaks, if it moves 20%, that is an easy way to make sure you don't round trip your bags and that you take profits, growing your position or decreasing your average buy price so that you can be in profit whether the market is up or down. You don't have to be a day trader to do this. You can use free tools like CoinGecko or Coinbase to set alerts for when the price hits a certain target, and even in some cases, a limit order, which is an automatic type of order fulfillment that allows you to specify a target at which you want to buy or sell, how much you want to buy or sell, and then executes it for you. You have the tools, and we want to help you make the most of this. So let me remind you that if you are somebody who's trying to learn cryptocurrency, we are here for you live Monday through Thursday, 7 a.m. Central Standard Time, live Wednesdays at 7 p.m. for RiseUp After Dark, and 24/7 in the RiseUp community. It is the first link at rumshq.com. That's RUMSHQ.com. The only thing missing is you. Alex, as we enter the final moments of the show and prepare to truly ride our dogs and ponies off into the sunset, I'd like to invite you to give a final thought for the folks listening. And folks listening, I'd like to invite you to give a final thought as well. Alex, the floor is yours.
I think any opportunity to go through this kind of strat, like re-hitting just over and over again, this strategy of dollar cost averaging, not only in, because it's almost always talked about exclusively in the sense of just how to buy, but also how to sell. I really want to stress how important it is to, even if you don't have a strategy that looks like someone else's, to think about it and to be aware of them. I heard an awesome quote from a creator whose name is escaping me, but I will find him, and I'll share the video in the circle after this. He was, I think, a relatively new creator. I had scrolled through the feed, didn't see a lot of other crypto videos, but was talking about Circle, specifically the Circle company and their revenue last quarter and how much it went up and exceeded expectations and all that kind of stuff. And he just made this comment, and it was interesting because you could tell this is not like a crypto maxi or anything like that. And he was just like, I can tell that this stuff is going to be a bigger part of my life before too long. And I don't want to wait until that happens to understand it. And I just thought that was such a banger. Regardless of whether or not you take action on the thing you learn, it is such a good move to learn stuff. I'm bullish on learning stuff. So, come up with a potential plan for taking profit. Even if you never pull the trigger on it, it's good to kind of have it in the back of your head. I always say, as reductive as it sounds, the market can only do three things: up, down, sideways. And as long as you have an idea of what you want to do in each of those three scenarios, you'll never be caught unawares. And that is such a peaceful, Zen instilling feeling to have. I can't recommend it highly enough. And then the last thing I'll say is that these strategies, the reason I feel so convicted on this idea of being able to just take profits when it goes up and look at re-entering positions that you believe in when the markets go down and kind of playing it that way. The reason I believe in that so firmly is because I've literally rescued positions that were underwater before. My age-old example is, what if you had bought ETH years ago at $4,000 and then for years it was trading below that, but it was still ranging hundreds of dollars up and down just below where you were at? Using a strategy like this, you can literally rescue that position and slowly walk that position to being in profit, even if it never went above $2,500 again, just over time with this methodical, measured approach. I mean, it is powerful. The volatility is powerful. And if you can capitalize on it, you can win.
In other words,
It's the perfect time to buy.
thank you.
Amen.
Okay, here are the final thoughts from our friends in the crowd. We've got Amso, who says, how to sell is harder than how to buy. Indeed. I would give you a ding, but I have to find another sound because Cvish says, play dolphin. No problem. Tori says, another world is possible. Jeff says, great info today, guys. Jeremy says, take chances now. Be really cautious in November and December. Purple Bitcoin says, what's up? What's up, Purple Bitcoin? Been trying to tell my redneck brother. Crypto boat, we get you. Cvish says, DCA, always, that's the way. Jeff says, this show is so motivating and so much more. And Mr. Robot Stecklerish says, some of the wealthiest men I know wear jeans with holes. LOL. And if you need help, you need friends, you need a place to go to ask your crypto questions, then this is your last chance. Head to the link in our bio wherever you are, whenever you listen, and look for the button that says join our free community, start here. We want to see you there because it's a place where people can ask their questions, share what they know, get a second opinion, take a class, meet a friend, learn, grow, and we say, rise up. So my friends, thank you for being the very best part of what we do. Can't wait to see you there. Until next time, everybody, stay safe, be well, rise up.